Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week get everything you need to know in 90 seconds at 9 o'clock with news that signals from the world's second largest economy aren't positive, with data that is causing alarm both inside and outside the country. Their reactions are also bringing overreactions. In a dramatic online posting, Chinese media have unofficially announced that New Zealand and Australian beef imports are to be blocked from entering the country, including from Hong Kong, effective immediately. It doesn't seem to include dairy products, however. Apparently, our products bring the risk of foot and mouth disease, presumably because we're close to Indonesia, which has the disease. Or it is a convenient excuse by Chinese wolf warriors to beat us up until we toe the Beijing line on political issues. In any event, the foot and mouth aspect is plainly false, so that aspect will blow over quickly. But the message has been sent. The negative news isn't only that. There's also some sharply negative data out of the booming US economy. The New York Fed's regional factory survey delivered a huge negative surprise, falling very sharply. New orders and shipments plunged, and unfilled orders declined, and no one saw that coming. After stagnating in the March quarter, the Japanese economy picked up to be 2.2% higher in the June quarter from a year ago, and the first quarter was revised higher too. This confirms a string of better data we've been noting for a few months now. But the big data movements came from China, where resale sales data for July disappointed. They came in up only 2.7% from year-ago levels, lower than the June gain and much lower than the 5% gain expected. And it is a bad miss. Industrial production came in weaker too, although not by quite as much. Both sets of data confirm China isn't going to get anywhere near its target of about 5.5% growth in 2022. Independent analysts will be downgrading prospects on this data. And China's electricity production rose 4.5% in July from a year ago. Thermal power, that's coal-fired, was up 5.3%. Energy production rising faster than output isn't a good look for productivity either. And house prices in China in July fell more than expected from June, down 0.9% year on year. That's their third straight month of retreat. After this data was released, the People's Bank of China said in an unexpected announcement it was cutting the interest rate on a 400 billion yuan one-year medium-term lending facility to some banks by 10 basis points to 2.75%. And it's their first rate cut in 7 months. The US Treasury 10-year yield starts today at 2.79%, down 5 basis points from this time yesterday. And the price of gold will open today at $1,778 an ounce, which is down $26 from this time yesterday. And oil prices start today down $3 at just under $88.50 a barrel in the US, while the international Brent price down just on $94 a barrel. And the Kiwi dollar will open today at 63.7 US cents, which is more than 0.75% lower than this time yesterday, as the greenback makes a bit of a comeback. Against the Australian dollar, we're holding at 90.6 Australian cents, and against the euro, we've slipped marginally to 62.7 euro cents. That all means our trade weighted index starts today at 72.1 and around down 60 basis points. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9.